I'm Luke Scolthorpe, Head of Strategic Relationships at the Chartered Institute of Credit Management. I have Lee Allen, Senior Vice President of Order to Cash at Corcentric. Hello, Lee. Give us a wave. Corcentric are one of our very much highly valued corporate partners of CICM. Lee's here to delve into what guaranteed AR success looks like and talk about a little bit about managed AR solutions that can help future-proof credit management. And there'll be an overview of tech. There'll be an overview of that solution to get us started. And this will be a very highly insightful webinar for you all today to hopefully get some very powerful takeaways from this. So without further ado, over to you, Lee. Thank you very much for joining us.
Thank you, Luke, and thanks to the CICM for asking me to speak today. So my first task, perhaps my first challenge, is to navigate Zoom and get my slide deck up. So we work in a Teams environment, so just bear with me.
You're sharing now, yeah.
So all being well, you can see the first slide in the deck.
That's there, Lee. Yeah, thank you. Yeah.
Perfect, thank you. Okay, so yeah, the title of the webinar today is How Managed AR Solutions Can Future-Proof Credit Management, which is quite a bold claim, and I think, Luke, you sort of said it well just a minute ago. How managed AR solutions can help future-proof credit management might be a more accurate, although less zingy headline. My name is Lee Allen. I am the Senior Vice President for Global Order to Cash at Corcentric. So I guess to begin with, I need to tell you a little bit about Corcentric as a business. It's a company that helps people purchase, pay, and get paid. You see that it's founded in '96, so it's coming up for its 30-year anniversary. I won't go through the stats, you can read those. But it is a global company, both in terms of the locations for its employees, but also for the customer base, which is spread all across the world. I'm based out of the London office, that's me. Or actually, I guess, like most of us since pandemic, I operate remotely now. So I'm actually based out of my home in Kent, but my nearest office would be London. I've been with Corcentric for just coming up for 6 years. I came into the business when I acquired a company called NetSend, which is a business that I founded maybe 20 years ago, something like that, which is an invoice distribution company. So I've been working with the CICM actually since before they were chartered. And I think in that sort of 20 years or so inside credit management industry, there has been a lot of change, and that includes artificial intelligence. And just as a nod to artificial intelligence, I did this with my video, with my photo. It's kind of amazing and horrifying what you can do with computers and AI these days. So in terms of what Corcentric does, as I say, is a company that helps people purchase, pay, and get paid. There's 3 main components to that offering. First one is technology. There's 3 aspects to the technology. There are software tools in source to pay. There are software tools inside payments, and there are software tools inside order to cash. That's only 1/3 of the solution. We also have a people and data component, so both as an outsourced function, but also as an advisory function as well. And that advisory arm is powered by the aggregated data that we see across the customer base. And then finally, there's finance component to it, trade finance, which helps with working capital management. So the combination of those three components are really aimed towards unlocking working capital that's caught inside the cash conversion cycle. That can be on the source to pay side, DPO extension, or on our side of the world in order to cash, DSO reduction. Obviously for today, that's where the focus is going to be, which is a relief because that's actually where I spent the last 2 decades of my working life. In terms of customers, really all sort of shapes and sizes, all industries, all locations globally. I think that there's no real industry vertical where our solutions are more suited. And I think that speaks to the universality of the challenges and the processes inside credit management particularly. There are variables by industry, perhaps by company, almost certainly by individual within those companies, but there's a universal nature as to the challenges that have to be overcome that are applicable across the board. So it doesn't matter if you're a shared service center, doesn't matter if you're a head office, doesn't matter if you're a local office, challenges are the same, the solutions therefore are the same. So that the customer base is pretty wide, pretty varied. I think we've seen most scenarios inside the installed client base, but I'm always happy to learn of something brand new that we've never encountered before. And I found this quote in amongst our sort of marketing literature. This is from a client speaking about how we help them adapt to constant change. And when we're talking about future-proofing, change is really important, right? That's why you need to future-proof. So I thought this was a good start point and a good sort of lead in to the topic today is really because the world is changing. That's why we're talking about future-proofing. And the world's not only changing, I guess the world's always been changing, but it feels to me that the world is changing now at an unprecedented pace. That's driven by three components. There's the technology, there's the current economic volatility, and the way that the workforce dynamics are changing as well. And within those sort of three components, you look at technology, really development is outpacing adoption at the moment. So when I go back 20 years when I entered this industry, I look at invoice distribution because that was my entry point. It was all done one way, right? Everybody posted their invoices, 99%. Maybe if you work with Sainsbury's, there'd be some EDI or Tradercoms, something like that. But the majority were posted. So although that was a process that was slow, cumbersome, and expensive, it was a singular process that you had to control. When you look at invoice distribution today, it's disparate and fractured. It's multifaceted. There's lots of different processes all running in parallel just to get the invoice out to the customer. And I'm sure people on this call have either done it themselves or have someone in their team that's probably had to manually type an invoice into their customer's website as a result of technology changes. What tends to happen with technology outpacing adoption is you have to plug gaps with people. And AI, it will keep cropping up everywhere I go. AI is a subject matter. It's a hot topic at the moment. It is creating competition. It is enhancing what people do. It is changing the dynamics of the technology world. And with any new technology comes an increase in threat and fraud. So cybersecurity is a whole different industry that requires a response and investigation. So then we come to the way that the world is changing financially, persistent economic uncertainty affecting investment. So in the last, 7, 8 years, in no short order, we had Brexit, then we had pandemic, we had war in Ukraine. I suspect half of you have got an eye on the BBC website right now to see if the budget is going to be the next thing that we add to that list of economic uncertainty. So I think it's kind of unprecedented, the amount of sort of volatility in the global economic market. Every single credit event I go to has an economist stand up and present their view of the world. They're very, very rarely optimistic, those outlooks, and they're very rarely consistent. It's very turbulent and very changing. That obviously impacts on interest rates. And then the last thing in around the finance, there's a lot of regulation that's coming in now. Again, I default to invoicing. I do default back to invoicing, but even in that space, regulation around e-compliance, that increased costs, the financial world changes. And then finally, people and process, geographic working challenges. I was just talking to Luke before we started. Yesterday at this time, the gardener turned up and started blowing leaves directly outside my office. It's a hugely noisy enterprise blowing leaves, right? Not something I ever had to deal with when I worked in an office. Last time I was speaking to Luke, his dog was barking in the background. Not something I ever had to deal with the office. And what happened with the pandemic is there's a rapid decentralization from a centralized working environment to this sort of myriad of little satellite offices. And it brings with it a fair amount of advantage, I'd say, but also a number of challenges and things that we have to adapt to. And it happened quickly, right? So I think we're still catching up. And there is this general problem at the moment when it comes to attracting and retaining talent. I mean, bottom line, there's just not enough good people to go around. I think every day you see a report on falling fertility rates. This is a significant challenge in the workforce, keeping them happy, finding good people to bring in. This is a challenge everyone's facing. What I've noticed when I go to credit conferences is a growth in recruitment companies exhibiting in those conferences. So that tells you, there's demand in the market for that kind of thing. And then AI, automation, incorporating that into our everyday working lives. It's sort of transforming the way things are done. So we need to be ahead of that. We need to accommodate that. We need to get on top of it. On this slide, I used that image there of the oil tanker through the sea for a good reason, because you may have heard the expression that anyone can be the captain on a calm sea, right? And at the moment, for the reasons I list there, the sea is very much not calm, right? It's very stormy. But perversely, this is kind of good news for people in credit management, right? When the going is tough, when the seas are rough, it's an opportunity to demonstrate value, to navigate through the storms. So good people get highlighted, right? It's an opportunity to sort of demonstrate value to your business as making a difference. And very much like that sort of feeds into the theme of future-proofing, is if you're good in a crisis, you kind of need a crisis to look good. And I think there's a different way of looking at life, which we'll get onto. So I took this quote from McKinsey about the CFO. So Corcentric's solutions are sold into the office of the CFO. And I probably spend the majority of my working life speaking with CFOs. And in times of economic uncertainty, 84% of CFOs are asked to take a more strategic role. And this is important to us because what happens in the office of the CFO impacts in credit management. It rolls down to what we do. And so I thought it was pertinent really to sort of mention how the world is changing, but also the role of the CFO is changing as well, in line with that. And so traditionally, your CFO would be the financial steward. I was at a CFO event recently. I was sitting on a panel, and the main topic of conversation amongst CFOs was this change to their role to be a value driver, to provide this strategic insight and leadership. It was actually challenging them to be a bit more like salespeople, right? Because to bring vision, you need to sell up and down chain. And the consensus in the room is they're trained accountants. The term they use themselves is bean counter, right? They're good with spreadsheets. They're not necessarily, good with those sort of human interactions and negotiations. So that's a big change in their role. And that change is impacting and informing what happens in credit management as they get to grips with those changes. And so their role encompasses those three components that I spoke about that we provide: technology, people and process, and finance. And they're looking at that and they're saying, what are the business outcomes that we need to look towards? And I don't think there's anything revolutionary in that list there. They need to reduce costs, they need to increase efficiency, they want to unlock their working capital, make sure there's zero risk, etc., etc., etc. The big difference that's coming is in approach to these topics. So traditionally, they might look on a micro level at a point solution to address any one of those points in any one region of their world. So you look at technology. You might go get an upgrade on your ERP system to address a particular requirement. You might go get a partner to supply some software, say cash application, to address a specific need. And what happens over a period of time is that you're making these in the moment firefighting decisions to solve that problem, fix that problem, improve that efficiency. And what you're left with at the end of the day is this kind of patchwork quilt of solutions. Some are homebrew and DIY, some are bought in, some are using people to plug the gaps in the technology because the systems don't speak to each other. If you've ever typed your invoice into a customer's website, that's a gap in your technology, right? That you're being used to fill. And so what the CFO is doing now with their new role as being a value driver, as being strategic, is taking a step back. And they're saying, what can we do holistically to address these business outcomes? And holistically means you need to make decisions where there's harmonization across technology, finance, people and process. They're not separate considerations. They're actually all overlapping. They're the same thing. So this change in the world has led to a change in the office of the CFO, which is what's driving change in credit management departments. This is how the sort of the flow runs. And so when we talk about future-proofing of credit management, what we're actually talking about is quelling a storm. So from all the challenge, there comes an opportunity. So I spoke about how anyone can be the captain on a calm sea. Well, how about if you could master the storm? What would it look like if you could put your boat in a mill pond? And this is sort of the opportunity that comes from managed AR. It's future-proofing and it's guaranteeing outcomes. It's kind of like a shortcut to success. And when I attend credit events like Credit Fest the other week, because there's a component of outsourcing in managed AR solutions, there is a resistance. There is there's a cuckoo in the nest, right, aspect to this solution. But actually, the way I look at it, this is not a rival, right? This is a cheat code. Right? And so this is the lens by which I filter the solution. This is the way I think about it. And I'm hoping today that I can share why, and it will be a convincing argument. There is a Q&A at the end. You can tell me if I've got it wrong. So there's a very simple idea behind managed AR, right? It starts with you, the supplier of goods and services, and you raise an invoice. So that process remains exactly the same. But at that point, you transmit your invoice data to Corcentric, and a number of things will happen. First thing, we will create and deliver your invoice to your buyer. So say that it's a business that I've been involved with for 20 years. Invoice delivery has never been more complex today than it's ever been. But Corcentric will deliver your invoice to your buyer the way it needs to be sent. So that could be the way specified by the buyer, could be the way specified by the government in which they, the country they operate in, e-compliance and so forth. Here's where things get interesting. Corcentric will then pay that invoice to you. So this creates this concept of fixing your DSO. At any given time, there's a negotiation and agreement, and that's when you will get paid for that invoice. And then some point down the line, the buyer will pay Corcentric for that invoice. Or of course, they'll need dispute management or collections management, right? That'll be handled by the Corcentric team. So it's a very, very simple idea. It's very closely aligned with things you've probably seen and spoken about before, things like BPO and outsourcing and factoring, but it's a blend that's distinctly different. I get onto it with some detail. The key tenets around which that simple idea run is technology enabled. So it brings to the table the digitization, the automation, and then gives you that kind of reporting, visibility, and forecasting that you expect from something that is deeply built from the ground up to be technology platformed. Because it's designed from the outset, from the start, you haven't got this sort of architecture leaning on top of architecture and these gaps that I've been talking about. The second aspect, and I think this is the one that's probably most contentious and most interesting to people on this call, is that it is a managed solution. But it's not outsourced in the traditional sense. So it really is an augmentation of the team where, excuse me, we have shared objectives and focus. And it works best when the experience and expertise is divided between us and yourselves. So I'll come on to a case study later, but you know your business, you know your customers. So any outsourced component is never going to be as good at that as the existing team. But we've already seen in a changing world that it's hard to grow your team. It's hard to get the right people. It's hard to scale up. And what we find is that people are being asked to do more with less. And this managed solution is an answer to that question. It's an augmentation to your team without the pain of recruitment and hiring and training and management. And then, finally, the finance. So this is the unique aspect that brings that guaranteed business outcome. So in any environment of credit management, it's a blend of technology, people and process in order to get paid on time, right? And everything you do and every decision the CFO might make as to where to invest is in the service of improving that process. But there's no guarantee on that return. But when you put the funding in place, so you get paid on day 15, for instance, then all of your outcomes become guaranteed. So it's a unique sort of combination, and this is why it's attractive to a CFO, because it's looking at the entire process holistically. It is future-proofing where it's going to go, but more importantly, it's guaranteeing the outcome. And in the example, I'll give you what that looks like, and you can see why that becomes attractive into the office of the CFO. And when you look at this as a proposition, you know, it's possible to buy a parts catalogue and buy all the components and build a car in your garage, right? And people do that, right? Some people prefer to go and buy a car outright, okay? When you buy a car outright, there's a CapEx component. You have to put the money down to get the car. You don't have to maintain it. You have to insure it. You have to drive it. So I think it's probably more common that people now lease or rent their cars. You still got to drive them. This solution to me is more akin to Uber, right? You use an Uber, you book an Uber when you need to get somewhere. You want to be at the airport, you want to be there at the right time to catch your flight, you book an Uber, right? It comes with a car, it comes with a driver. And so in terms of future-proofing, if you've purchased a petrol car and the government banned them, you've got to do something about that. You're forced into action. If you're using Uber, it's someone else's problem. You book an Uber, an electric car turns up. So this is sort of very much the vibe, if that's not too woolly a word, of managed AR solutions. And if I can just dig into those outcomes a little deeper. So business model as a service, there's 2 points there that are sort of co-joined, but they're actually very distinctly different. No capital outlay and no new technology infrastructure required. So capital outlay, when you think about it, when you're looking at a solution that's really designed to unlock working capital, if it comes with a capital expenditure up front to do it, there's a sort of a catch-22 to that sort of idea. So this comes with no capital outlay. And also technology infrastructure, this idea of if you have a petrol car and they become banned, you have to do something about it. I've yet to meet an IT development team that has more people than projects, right? So that becomes a bottleneck inside an organization. It also means that when they deliver a solution, that solution starts to die at that point because they have to move on to the next project. They've got a lot of customers, right? So as requirements change, as the market matures, as this rate of change and growth continues, the solution starts to be outpaced. It falls behind. So business model as a service means that you get that perpetual evolution. Uber will send a driver in a hydroelectric car or whatever the future may be. It becomes someone else's problem. So that's a very attractive proposition to a business that's facing a challenge of how do we keep ahead of the curve? How do we keep up to date with regulations, with customer demands? Where do we integrate AI? How do we invest in it? Are we buying the right tools? It all becomes somebody else's headache. Invoice distribution, I think I've touched on this too many times already in this webinar, but it is now multi-channel, it is fractured, it is disparate, driven by buyer demand. We want our invoice to come to us in this format or via this third party, Tungsten, Cooper, Ariba, whoever it may be. And now governments are joining in and saying, well, we want it to be compliant. We want it to run through the government portal. We need to make sure that we're controlling taxation and fraud. So that particular task, which 20 years ago was someone stuffing envelopes with a machine in a room, is now multi-people across multiple departments collaborating to get an invoice out the door. I love technology, but 20 years of technology in that space has actually made things more complex rather than less. To me, it feels like going to the supermarket. I used to just tip everything on a conveyor belt. Someone did all the work and told me what I owed. Now when I go to the supermarket, I have to do that work. I have to figure out how to use the system. Which side does the basket go? What side does the shopping go? Where's the barcode? It's become more complicated, right, than it used to be because of technology. So fixed, dependable DSO, right? Corcentric will pay every invoice to an agreed schedule, right? So this, when we're looking at an uncertain macroeconomic business climate, that's your mill pond, right? That creates predictability and certainty. On a predictable, certain future, you can start making strategic decisions knowing that there's zero risk. So again, what I'm talking about here are the arguments that are flowing into the office of the CFO and the way they're thinking about the business and how that would flow down. Elimination of risk. So managed AR is not like factoring in that it is for every invoice, for every account, in every situation. It doesn't cherry pick. And it's done on a non-recourse basis. So hand in hand with the fixing of the DSO, that's where you get that dependability from. No write-offs, no bad debt, no late payments. In times of huge economic uncertainty, that is hugely attractive to a business. So this is the thing I think I probably spend most time talking about inside credit management, this aspect of outsourcing of BPO. It's slightly a dirty word, and it really isn't what this is designed to do. It's about augmenting and growing, not replacing. So yes, we will provide people to manage disputes and collections, but that's not instead of your teams, that's as well as your teams. And the idea there is really, simply where do you redeploy? Where do you refocus? How do you meet the growing demands of the business with less people, right? And I think everybody's knocked on the door and asked for budget to grow the team. Some more successfully than others. But this is a solution that brings relief into credit management. It brings people into credit management, but in a way that the CFO doesn't have to write a CapEx check, and then the challenge of, can we actually even find those people? Are they available, right? And in a seller's market, the cost of the commodity goes up, which is great news for all of us, right? We're all more valuable in what we do, but it doesn't make it easier for a CFO to go and get a team. And then payment processing, it's actually something that's sort of pretty much swept under the carpet and overlooked, but because Corcentric pays the invoice, you get one consolidated single payment with a remit file. So instead of taking payments from multiple sources at multiple times in multiple ways, that you have to do a cash app process, that becomes much more simplified. So these really are the guaranteed business outcomes that can be illustrated and demonstrated in terms of value, which I think is what's going to happen next. Yeah. So I put together a sort of a case study really to sort of financially highlight the points I've made. And the reason financially highlighting those points is important is, as I said, this is sold into the office of the CFO. They are, by their own admission, bean counters. So the commercial business case is hugely important. So this client, based in Dublin, they've got a European-wide customer base. They're in construction. It's an SAP environment. And we took their ledger and we did some analysis using the advisory. We benchmarked that against all of the data across the customer base. And we were able to extrapolate 8 what we call measurable values. And by measurable, I mean a value where you can put a cash figure on it. So the first one was unlocking working capital. So, cash that was stuck in their cash conversion cycle, the AR float, whatever you want to call it. There is a calculation that can be done to illustrate the value of that particular piece of work. And that was bringing DSO in line with terms. But you can actually accelerate beyond that, and that's what we did with this customer. So there's a cost of getting paid sooner because it means that your weighted average cost of capital is not something you need to consider. Credit guarantee. If you're paying a company to guarantee your credit, insure it against loss, you don't need to do that anymore. And there's a straight cost figure to not having to do that. And then bad debt, the number of write-offs in any given year. For this particular client, their bad debt write-off was a little bit higher than it had been historically, but that's because of all of the reasons that I sort of described at the beginning of the webinar with the world is changing. Payment processing, I just discussed that, but the Cash App, taking money in, FX, these are all elements which feed into a pure cost into a business. FTE value. So you'll notice there, this is not about replacing FTE with systems. This is about getting FTEs from somewhere else. What is the cost of it inside a managed AR solution versus what is the cost of recruiting, training, and hiring somebody? Invoice presentment, there is a cost to getting an invoice out. The invoice cost has come down because we don't use stamps anymore, but it's probably gone up in a hidden way because we're involving more IT teams. We're getting people to rekey invoices and things like that. So it's become a hidden cost, but there certainly is a cost to that. And then revenue growth. So if you can free up this process, free up the working capital, free up the experts inside a business to be deployed in the right way, looking at the right situations, then there is an opportunity to grow revenue inside the business. And again, it's one of those things that we're able to put a figure to. And this is what those figures are. I'm not going to go through them, but really, this is about transparency. So what our advisory team would do is run their calculations based on actual client data, that's what this is, based on their 12 to 24 months of trading history. And they will create a business case which is specific to the metrics seen inside that ledger. And I give you an example. This then goes back and forth, right, and is debated and negotiated and discussed because we use benchmarks, but they don't always apply. So the last person I spoke to, credit guarantee. He said, Lee, we don't use credit guarantees, right? I don't believe in it. Our cost is zero, right? So we zero rate that, right? We agree between us the commercial business case that it makes sense. The same metrics that drive the value also drive the cost. So factors like historical bad debts, the volume of customers, the value of the invoices, where they're based, the current DSO, how much acceleration is required, etc., etc., etc. That all feeds into it. So what we're able to then take back to the office of the CFO is a full commercial proposal of value and also pricing. And that then gives them a full ROI. Now, I have to be careful when I talk about return on investment because there's no CapEx in this solution. So there's certainly an investment of trust and of time, but not of capital, which is the standard definition of ROI. Okay. And assuming that the price is lower than the value, CFOs are happy, right? That's how you get decisions out of the office of the CFO. So you're probably interested to see what that actually looks like if you translate that into actual numbers. So this is not the full ledger. We divvied it up to 100 million sales volume per annum, just to make the figures easy. And the DSO was at 57 days. So we provided 42 days of acceleration and fixed it at 15. So that means on day 15, this company gets paid their money, come what may, right? Regardless. And on 100 million of sales volume, this solution unlocks 13.7 million pounds worth of value. And as I said, as long as the Corcentric fee it isn't north of 13.7 million, then CFOs see a solid commercial business case for this solution. And sadly, I can tell you that the Corcentric fee certainly doesn't exceed 13.7 million. It's way smaller. So there's a massive upside to looking at this purely from a commercial perspective. I say that because there's a lot of value that the solution brings that you can't put a figure on, right? I won't go through everything on this list here, but if you just look at, say, third-party expense, debt recovery, using a DCA, there's a cost to that. We don't get into the detail of trying to figure out what that cost is and trying to detail it in that business case. But three, I want to highlight cash flow. 100% predictability and certainty of invoice payment timing and the amount. And my sort of point here is, what's the reputational value to the person that introduces that solution to their company? This is this concept of quelling the storm. This is more than just being a good captain on turbulent seas. This is getting ahead of it. This is bringing the mill pond. I don't know how you put a value on that reputationally, but if this is a concept that you bring into the business and that's the outcome, I think that's hugely valuable. And scalability, we do tend to focus on the positive, on the upward trending arrow, growth. How do we support growth? There is a flip side to scalability. We've seen it in a couple of clients in the last 12 months where they've had to downsize operations because sales aren't going as well as they'd like them to go. And downsizing, scalability in the opposite direction, comes at a cost, and it's an unpleasant task. So there is a value there to being able to expand, but also to contract as the business needs in a very agile manner. The IT burden, I think I've probably touched on this already, right? I've never met an IT team that's sitting around saying, what do you want me to build next, right? They're always busy. They're always committed. And my experience is that the big projects at the top of the list, they don't tend to be back office. They tend to be sales, customer-facing initiatives. So there's a slight delicatessen aspect of take your ticket, join the back of the queue, and we'll get there. So there's a real value to not having to deal with that, not having to navigate that, not having to find your internal use case and ROI on everything you want doing. But I don't know how to put a figure on that, right? We don't. So there's lots of value that I think is felt inside credit management that helps future-proof, that helps grow the team, but it's just not appealing to a CFO because of the way they look at the world. So I have to wrap on artificial intelligence. Every single webinar, podcast, forum, conference, and event I go to is talking about artificial intelligence. So I have to, if you can't beat them, join them. You've got to be in the crowd. But 7 years ago, I think you could substitute artificial intelligence for blockchain. At every single event you went to, blockchain. What's happening with blockchain? What do you know about blockchain? And it turned out blockchain at that particular point was a bit of a buzzword. It hasn't really manifested in any sort of way that is really impacting on our lives. But I can tell you that AI isn't that, right? It's already here. It's already being used. It's already part of the Corcentric solution. It's sort of underpinning some of that tech stack. And for me, it sort of goes back to that concept of Uber, right? If you do book an Uber because you're trying to get to the airport at a given time, your driver may choose his route based on his experience and knowledge, or he might be using SatNav or Google Maps or Waze, whatever it might be. It could be a blend of all of those things. From my perspective, sitting in the back of the car, I don't really care, right? That's his job. I've delegated that to him, and I'm busy doing my own thing in the back, probably replying to work emails on my phone, right? And I think that that's kind of the future-proofing aspect of managed AR. Because of the guaranteed outcome, because the DSO is going to be fixed, because the money is going to get paid no matter what, it slightly becomes irrelevant how much AI is underpinning that. Is it all AI? Is it none AI? Is it a blend? Is it a mix? Right? But having said that, my personal view on AI is that it's not a panacea. Right? It's not a universal cure-all. If you've got a bad process, AI is not going to fix it. So I think AI is one of those things that people are scared of, they're threatened by. So I think it's useful just to put it into some context. So we already sort of established that credit management, combination of people and process. So it could be recruiting people, using advisory, outsourcing them. There's the software and the technology, and there's finance. Right? There's players in each of those particular fields. And of course, it's a Venn diagram, so there's overlap. So then you've got people that sit between those areas, so between people and technology, BPOs. And hopefully, I've established that at the heart of that overlap, uniquely, you've got Corcentric. But my question is, on this diagram, where does artificial intelligence fit? And it fits right there inside software and technology. It's not all of software. It's not all of technology. It's a part of it. So it's a part of the solution. So for all the buzz and all of the excitement and all of the actual real-world gains that artificial intelligence can bring, it's not a magic wand, right? It's a part of the solution. And that's really worthwhile bearing in mind. So this kind of brings me full circle, because I actually started with this image of me, which I used artificial intelligence to, let me run it again, right? It's horrific and horrible. Yeah. Actually, having said that, I'm looking at this big picture of myself on the screen. That's probably worse than the AI thing. Now I'm confronted with it, right? But when you look at AI, when you look at that particular use of it, it started with an idea, my idea. I had to have the idea, right? To do something quirky with my image. Artificial intelligence created that video. And then it ended with me because I had to find an application for it. So AI did the execution, I have to find the application. I decided to put it in this webinar at the beginning, kind of like an icebreaker. And I also decided to put it in at the end as a callback and hopefully a nice sort of wrap on the entire webinar. But where it works best is in collaboration with human beings. It started with me, it ended with me, it did the bit in the middle. And so my view on artificial intelligence is it's never going to replace human endeavor. It's going to augment it, it's going to enhance it. It is a tool that we can use to get somewhere. And that is the same with managed AR, right? It's a tool. It doesn't compete with your team. It complements it. So although these decisions are maybe being made in the office of the CFO, and it may be coming downstream, and you may feel this is bad news, hopefully today's delivered some reassurance that it's actually far from being a threat. It's the cheat code. It's an opportunity. It's quell the storm, put your boat on a mill pond. So I found this quote on the internet, right? The secret to change, the world is changing, is not to focus your energy on fighting the old, but on building the new. I got it off the internet. It's credited to Socrates, so no doubt that's entirely true, right? That he said that, right? But I thought it's very apt. And my closing message really is that if you want proven results, that's something that we can build together. So thank you, Luke. I guess I can't see the chat box if there's questions on the way, but we've got a few minutes just to pick any out now.
Yeah, we've got a question from Paul Woodward. Let me just check. It's just got my screen. Does Corcentric really take the hit for all the bad debts? Sounds too good to be true. Second question, if I may, do Corcentric handle export documentation, letters of credit, etc.?
Yes. So yes to both those questions is the short form answer. Yes, we really do take the hit. And I know that because I'm the person that gets the earache when it happens, right? So what happens is part of that business case analysis is looking at 1 to 2 years trading history. And then we use that and we use the advisory, some of the technology to create this vision of the future that informs our pricing. And it's about risk profile. But as we know, no one's really got a genuine crystal ball. So things happen unexpectedly, and we take the hit. It's part of the deal, I'm afraid, for us. Good news for the customer, bad news for me, because it's my phone that rings when it happens, right? And then the second point there, I guess that's a question about distribution. So when I talk about invoice distribution, really it's a distribution mechanism and service for any kind of document. Doesn't have to be accounts receivable. We do have some atypical implementations where we do marketing, for instance. But I would say that the majority is invoice, end of month statement run, dunning process, letter of credit, so contract. So yeah, anything that needs to be distributed to end customer, that service and system is applicable. Yeah.
That's great, Lee. Thank you. Does anybody else have any other questions? Maybe if we can think of sharing some challenges around AI management or integrating automation or managed services into any of our processes. Has anybody got anything else to share? Oh, we've got another one coming in from Paul Whitty. If you're saying Corcentric are helping taking some of our staffing issues away, how do they overcome? How do you overcome your staffing issues?
Yeah, and that's a very good question. And actually, it's broader than just staffing, right? Because similar question I get asked is, how are you going to do this better than I can do it, right? And the answer is, we can't, right? There isn't a magic wand, right? And in a lot of instances, for us, there's some initial pain. It's a J curve, right? So when we take on a new ledger, there's a degree of learning. And while we're learning, we're slightly getting worse. So the DSO might actually extend. But because we're paying to a set thing, it's our pain to swallow. And then we come out of it and we get better and we find our feet, we find our efficiency. The simple answer is we're doing exactly the same things that you're doing to find people, to recruit people, to train people. What we can offer candidates is variety, because we're not a singular entity. So multiple ledgers, multiple regions, multiple challenges. So there's lots of sort of aspects to engagement of staffing, which makes the job interesting. And then the second thing is just is about retention, right? So because you've got a tech stack that's built from the ground up specifically for these purposes, we don't use people to plug gaps. And plugging gaps with people is what creates, you know, sort of monotonous admin tasks that create disgruntlement, a lack of joined up thinking, that kind of thing. So we don't really suffer that particular problem from a retention point of view. But yeah, trying to get people, we're appealing to the same candidates you are. Some of the people on this call might even be people that, you know, we're trying to bring into the system. Credit management is a people business, right? Same as selling. It's a people, first and foremost, it's a people business. So it's a challenge for us, but it's our challenge. I guess that's the underlying message. It's if we don't have the people, you get paid anyways.
We have another question that's just come in, Lee, from Yaz. Great presentation. Everyone's complimented you on your presentation. Apologies if it's a silly question. Well, no question is silly. How do you obtain your customer contact list? Do you pull this data from your client's system or set up your own customer contact telephone, email lists?
Yeah, there is no silly question, but there could be silly answers. I just add that in. Yeah, it depends. It depends on customer to customer, actually. So there's quite a lot of flexibility as to how we implement, set up, and then run, and governance as well. The preference would be to work with your existing data set. Part of the initial sort of onboarding process is a kind of a data cleanse that we do to try and update contact details. We often find you'll get email addresses for sales contact, not AR contact, for instance. So there's a sort of an opportunity to sort of cleanse and clean up the data. And then how we run that on a day-to-day will vary based on need and appetite between the businesses of pulling and pushing data between ERPs, or we have some that are a bit more rudimentary, I would say.
It's great, Lee. Thank you very much for answering those questions. Thank you to everybody for listening. Thanks for the questions at the end. Thoroughly enjoyed the presentation, Lee. Lots of good takeaways. This session will be available on our resource library. If you need to, from a participation perspective, if you want to understand a little bit more about Corcentric, then get in touch with Lee and the team, and certainly visit the Corcentric website. Really great to have such a good participation today. We will absolutely welcome you to any and all of our future webinars. So from me, thank you very much. To Lee, thank you very much for your time. Thanks for the insights. And until next time, thank you very much, everybody.